Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, give us a like, subscribe, let the algorithm know. My guest is Coen Jonker, who is CEO of Tyme Bank, a neobank operating out of South Africa and now in the Philippines and looking to expand beyond. I spoke with Coen about both the challenges of being a challenger bank in an emerging market, as well as the steps he's taking to make sure that it remains a profitable enterprise. Coen Jonker, welcome to DigFin VOX.
Jame, good to speak to you again.
Great to have you. You're running now Tyme, call it a neobank or a digital bank with a Philippine license. Very exciting stuff for you. Why don't we start with, you came from a traditional banking background. You were at Commonwealth Bank, if I recall. So tell us a little bit about how you went from being in a traditional bank to being in a startup bank.
James, so much of what we see in innovation in the world is actually born from trying to solve difficult problems. And for me, for the last 20 years of my life, the difficult problem I've been passionate about is financial inclusion. Mm-hmm. And what's become clear is that if we want to bring financial empowerment and agency to millions of people who are sitting on the edge of the economic system in the world, that traditional banking just doesn't get there. The cost base is too high, distribution is too expensive and too slow, and that the key is digital banking. So it's really that passion for solving the problem of financial inclusion that convinced me to move into the digital banking space, and as importantly, to move out of large institutions into the entrepreneurial space, sort of start fresh.
Yeah, so obviously there's a feel-good factor in working in financial inclusion, but let's put that aside. We'll just take that as a given. You like what you do maybe a little bit more. But from a hard-nosed money-making point of view, how, it's still early days. Can tech-enabled startups actually make the kind of profits that large deposit-taking and lending institutions have been able to achieve?
Jane, that might be the best question somebody's asked me on this topic in a long time. And the way I would respond to it is to say that 3 years back, we believed that financial inclusion could be hugely profitable. What we can say now is that we know that it can be hugely profitable. And the reason for that is we've been at this now in South Africa for 3 years. Mm-hmm. Building a bank that now has 5.3 million customers. And in that bank, we serve the poorest people in one of the countries with the biggest Gini coefficient, the biggest gap between rich and poor in the world. And we know that our unit economics tell us that we make money from the poorest people in South Africa. And that is somebody who gets a government grant of less than $1 a day because they have no other source of income. And the key to that is really structural cost advantage, plus scale, plus good customer experience. And if we can triangulate those things, we can give customers what they need with the right cost base at the right scale. We know that this can be a very profitable business category.
And that's because your cost base is so much lower.
Yes, that's exactly right. And particularly the cost to onboard customers, the cost to serve customers is much lower. And there's a lot that goes into that, from the tech stack that you run, to the distribution that you run, to how you do marketing, and to how you contain your overhead costs in the business.
But you still have the same compliance and regulation.
That is probably one of the most challenging aspects of building a digital bank inside a regulated environment, as opposed to running a fintech or a neobank that sort of sits on the sides or rents a license from a regulated player. So there's no doubt that being a fully licensed digital bank, as we are in the Philippines and South Africa, and as we hope to be in Pakistan one of these days, is a more expensive exercise. But it also has significant structural long-term advantages. And the biggest one is that your cost of funding over time can become significantly lower. So you take a bigger bet, initially you spend more money. There is undoubtedly a regulatory and compliance weight that sits in the business that you could get around by being a fintech. But at scale, the long-term structural advantages are actually very significant.
And does the funding sources for a neobank look the same as a traditional, like a Commonwealth bank where you used to be, heavy with deposits and relying on that for funding your own business? Or do you have to go to the capital markets and borrow?
Jane, the answer to that really depends on the strategy of the particular digital banks. So we do see that there are banks that are very lending-led. A good example would be a new bank, in Brazil and Colombia and Mexico, who we really admire. But they went very much with credit card as their lead product, lending-led, and they are very dependent, and were particularly in the early stage very dependent on wholesale funding. We went with a transaction-led strategy. So our first product in South Africa and in the Philippines is a transaction bank account with savings solutions and so on, which means that we currently run at a deposit to loan ratio of sort of less than 50%, which means we have more than double the amount of deposits than loans on the book. And we think that is quite a good strategy. It's a hard strategy because it's harder to make money on that side of the balance sheet, but it's a very good strategy from a risk perspective.
Okay. And so that goes back into the cost issue.
Yes, it does. So to give you a sense of how big these differences are, if we were for our lending book dependent on wholesale funding in South Africa, we'd probably be paying somewhere between 9 and 14%, depending on the quality of book, for wholesale funding. Our average cost of funding on the deposit funding side is around 3.4%. So that is a meaningful difference in spread between those two sources of capital.
Okay, so you've got a nice net interest margin there.
Exactly.
Okay, very good. Why don't we talk a little bit about Tyme Bank itself? What differentiates you? I think I know you best through your kiosk. So why don't you just explain that? Because you're not, I wouldn't say you're purely digital in that sense.
Yes, it's an interesting debate that we have in the business on how we talk about this, because we have these digital channels in retail environments. So the channel itself is digital, but it's not what we would normally sort of think of as digital, which is on the phone or on the PC.
Right.
And you're right. I would say that characterizing the unique aspects of our business, that physical distribution aspect is probably the most unique aspect. And the way we think about it is that many customers are not confident to jump in one big jump from a branch or from the cash world in which they live to doing all their financial engagements on the phone and online. And what our physical distribution model allows us to do is to essentially create a sort of interim stepping stone, a digital channel that sits in your local grocery store that a customer can come to. They can open a bank account there, they can get their card replaced, reset their PIN, etc. And what we often do is we put what we call an ambassador, essentially an education agent, next to that kiosk to help people engage with that channel and give them some confidence and comfort in engaging with the channel. The other thing we do is we integrate into retail stores, into their cash registers and checkout counters, for the purpose of allowing customers to do cash deposits and withdrawals very cheaply, and again in a way that is very user-friendly. And what we've seen with those channels is that they allow us to give people who are not digitally native and typically comfortable with the digital environment an experience that they find to be a friendly experience. 80% of our 5.3 million customers have actually come to us through that channel rather than directly online.
And just explain a little bit what these kiosks do. They sort of look like card ATM or vending machine type things.
That's right. So they essentially a tablet that presents a customer self-service interface, very similar to the process that you would go to if you open a bank account on your phone or on your PC. But what it adds to the tablet, it adds fingerprinting, biometric capability, facial recognition capability, and it adds the ability to actually print a debit card. Mm-hmm. So the customer's experience of the kiosk is they go up to the kiosk, they present their fingerprints, they present their phone number. We do all the necessary KYC checks and so on in the background. And within, on average, 3.5 minutes, we give the customer a fully KYC bank account with a printed debit card. We use Visa. So they've got the debit card in their hand. Their account is immediately live. And we then encourage the customer to go from the kiosk to the closest checkout counter to deposit cash into their account. And they can immediately start using their account.
Right. So there's still that mom and pop aspect where they have to go and put physical, cash into it.
There is that as an option, but of course, the bank accounts that we launch are fully functional bank accounts with full electronic funds transfer capability and so on. So the customer would also have the option, for instance, to just do an electronic funds transfer from another account, ask somebody to send their money. They would have the option to link a card, their current credit or debit card, to the account and use that to top up their account. So we give them every possible opportunity to find ways to essentially get liquidity into their accounts.
You talk about financial inclusion. How many of your customers, for them, is this their first or primary account versus something that they're building on top of an existing banking relationship somewhere?
Yeah, it's an interesting question to unpick. In a market like South Africa, which is technically quite highly banked, we only have about 15% of our customers who say that we are their first account. Mm-hmm. But what we see with a big percentage of the rest of our customers is that they are chronically underserved by the institution they're with. They often only use the account they have to get a salary or to get a social grant and draw all that money in one go. And so what we focus to do is to go beyond just opening an account and engaging with customers to increase the use cases and the transactions that they use us for. To give you a sense, when we started, our customers did on average 4 transactions a month with us. They now do on average 10.4 transactions a month with us. And so that is much more about creating an empowering and useful a tool for customers, rather than just sort of counting the numbers of customers that get onto our account.
You began in South Africa, and then your first expansion was to the Philippines. Why the Philippines? What was good about the Philippines or attractive? And also maybe tell us a little bit about why some of the other markets were not the right fit.
Jane, yes. The way we think about our business is that we've got a particular, call it a recipe, a certain operating model that has strengths and weaknesses that work better in some markets than in others. What I would say about the Philippines is that it is structurally one of the markets that are most similar to South Africa, where we have been successful. the things that particularly attract us in the Philippines is that the Philippines have, like South Africa, a progressive regulator with sophisticated KYC regulations allowing for digital onboarding, allowing us to do banking in the cloud. We run our entire stack on AWS in the cloud. So that regulator is very important. The second is to find good partners with strong retail distribution reach. And we were very lucky to find the Coen family and to be able to partner with them and the JG Summit Group from a retail distribution perspective, and also to get them in as shareholders. And then, of course, we look for a young, digitally savvy population that is chronically underserved. And I think something like 75% of people in the Philippines have never had a bank account.
How does that differ from like Indonesia, Malaysia, or India, other opportunities in the region? Did it come down to the regulatory aspect? Did it come down to the finding the right partners? Why are those not yet, at least in your empire?
Yes, I like the way that you say empire.
Got to be optimistic, right?
Yeah, we certainly have to dream. All those markets have things going for them, and I would certainly not say that we're not attracted to those markets. If you ask me the list, I would say partners are number one. Mm-hmm. Getting a great partner is probably the most exciting thing for us in a market. The other one is to just look at margins in banking. On paper, a market like India, for instance, is very interesting, very attractive demographically, but it's an incredibly thin market, a thin margin market from a banking perspective, and a challenging one from a regulatory perspective.
Right.
So I think that's an important aspect. And then the retail landscape, in other words, structurally, what does the retail landscape look like, is also quite important. Whether we can find what we have in South Africa, which is quite sophisticated, well-branded big box retailers that we find as a sort of an ideal environment for our kiosks.
Okay. In the Philippines, there's 6 digital licenses, plus, of course, some of the incumbents are trying to transform themselves. Where do you see yourself fitting into that environment? Is there going to be enough cake for everybody, or is it going to get to a point where there will have to be some cross swords?
Oh yes, no, I think we're already crossing swords and having fun doing it. A highly competitive environment is always a double-edged sword, in the sense that on the one hand, it's exciting because there are a lot of people who are helping you create the category, helping people think differently about banking, helping people sort of have a normalized view of a different way of doing things, and together the attackers, are taking on both cash and the cash economy, as well as the established players. So that's the exciting part about being part of a more competitive environment with more players coming in at the same time. But one has to be also clear that it's going to be more noisy, and that you have to be a little bit more special and a little bit more creative in how you stand out above the noise. And the approach we're taking in the Philippines is very much to take advantage of the extent to which we are embedded in the JG Summit ecosystem. And we think that creates a sort of a safe space for us, where we can occupy the territory and stand apart from our competitors.
Yeah. Obviously, the partnership is crucial. JG Summit has a huge footprint in the Philippines, touches people's lives every day. And of course, they're an investor in you, so they want to see you do well. But when you're linked up with such a powerful distribution partner, to what extent are you able to maintain, I guess, the independence of decision making at Tyme?
That very much depends on the partner and the way they play. So far, we've really had a great time working with the Coen family and the group. They've given the team a very high level of independence and autonomy. But they also do that with their other businesses, which means that you don't just come into the ecosystem and somebody tells everyone to work with you. You have to prove your worth in the family. And so that freedom is, in that sense, also a double-edged sword, in that you have to go and you have to convince the retailers that it's a good idea to work with you. And you have to convince the people in the loyalty program that's an important part of the ecosystem, that it makes sense to work with you. It's not just sort of it's not a free lunch.
Right. Okay. You've recently said that you're going to be entering Pakistan or looking to enter Pakistan. Huge country, big financial inclusion play. What else? What is it about Pakistan that's attractive to your business model?
Jame, once again, a progressive regulator and very good progress on digital identity and on instant payments, interoperable instant payments in the country. And those two things, digital identity, interoperable instant payments, are very important to driving the revolution towards digital finance. The other thing that's nice is, I would say that Pakistan is still largely undiscovered. I'm almost thinking, whether I should tell you this, because I'd like it to remain largely undiscovered for a while. I would say it's where Indonesia was maybe, 5 or 7 years back, in terms of the extent to which the international community is realizing the opportunity. Margins in banking are really good, both in transactional banking and, on the net interest income side. I would say the banking industry is very stable, but quite conservative in their ways. I'm speaking under correction, but I think the loan to deposit ratio is under 40% on average in the country, which means that the country remains quite chronically undercapitalized, I would say, right. And particularly small and micro business.
Right. So there's a lot of opportunity there to begin lending if you've got the right setup.
Yeah.
What does open banking mean in the context of Tyme Bank, not time like passage?
Yes. We big fans of open banking. You will have seen over the last few years that we almost announce a new partnership every 2 or 3 months. Mm-hmm. And we believe that given the pace at which customer needs evolve and the pace at which technology enables us to do new and exciting things, no one is going to be able to keep up and be the best at every vertical and at every aspect of digital financial services. So we think that the winners are going to be the people who partner well, who understand what they do well, and work well with other people who do other things well. And open banking is a great enabler towards that. Now,
how much of the data in open banking, in your experience, is data coming from customer-facing entities that flow into you versus other entities being able to call on your customer data to go into their operation?
Listen, it's early days. So I think initially it's more of a flow from the bank out than from the outside in. And the particular category that is probably most valuable now is KYC data. So customer identity data and the ability to actually certify that this person is who they say they are. I'll give you an example. We've got a service that we offer to corporates in South Africa, which we call Pay to ID, which is that if they want to make a payment to an individual, we will deliver back to them a certification to say, you've paid Jame and he is who he says he is. And you can show that to your auditors. I think so. Initially, I think that's the direction of flow, but it's early days, and I do predict that over time, we will see more and more rich and valuable data coming into the bank from the other end as well.
Right. But right now, you're sort of a custodian of verification or identity.
Yeah, that's one use case. And for us right now, I'd say it's the biggest use case. But I see other things happening. A good example, which is maybe somebody might argue not quite open banking, but I think goes in that direction, is our collaboration with loyalty programs. Mm-hmm. So in South Africa, we collaborate with the loyalty programs of Pick n Pay and of TFG, the Foschini Group, our other partner. And we are seeing very rich and valuable data flow in from those loyalty programs to us as well.
Looking ahead, how do you scale this business? Let's say you're successful in entering Pakistan. That will give you 3 markets, and I'm sure you've got maybe a couple more in the future that you'd like to try. Are these licenses are national, and they can vary a bit. So how much of this is really country by country, and how much of it is something that you can operationalize and create a global business?
I think that there's very much in our minds a clear dividing line between which part of the business is truly scalable global and which part of the business are domestic. So as you quite rightly say, the license is domestic, regulation is domestic, and customer needs and experience, I think, is domestic in the nuances. So at a very high abstract level, everyone in the world requires the same things. But the moment you get into the detail, there are hundreds of nuances. I often quote this old Sufi saying that you can only walk from where you stand. And where customers are, where markets are, differ quite widely. So those are the things that are very, I think, idiosyncratic to markets. And therefore, our logic is we take our time, we go one market after the other, and we make sure that we deliver into the market what that market needs at that point in its development. The parts that can be aggregated, that can be run globally, is really your technology platform, your data and analytics capabilities, your ability to design, build, and run the tech stacks of banks. And there is very significant a structural cost advantage in that for the domestic banks. To give you an idea, from launching our first bank to launching our second bank, we cut the cost from start to launch by 90%.
Okay.
And largely that cost improvement from the first to the second bank is a function of the level of reuse that we have through our technology stack.
Last question, Coen. When we look at all that data that you're gathering, still a bit early, but project out a little bit. Look into your crystal ball. What do you think that you'll be able to do in the coming years that will be something new?
You must ask that question to a smarter guy. What I realized when I look back 10 years and I thought what we could do 10 years back and what we're doing now is that I actually lack the imagination. But I'll give you a few pointers of things that we certainly think is very interesting. The one area is the ability for banks now to move into the data and virtual network operator space. Mm-hmm. I think with 5G coming, with virtual SIMs coming, and with regulatory environments being more conducive to non-big telco players playing in the space, I think there's an opportunity for digital banks to take the fight to the mobile operators. So I think that's an interesting space to watch. I think the other one is Internet of Things. We've seen very interesting models developing on things like vehicle and asset finance and other asset finance classes, using Internet of Things very smartly to manage risk and to build a much closer relationship with the customer through what you can actually see in the devices. So I can go on, but those are the ones that this week I'm excited about.
All right, great. Well, I think that maybe in a year from now, we'll have to revisit this and see where some of these technologies have played out. And of course, hopefully by then you'll be live in your third market. So Coen Jonker from Tyme, it's been a pleasure to speak with you.
Thank you.